Hello dear traders, and welcome to another update on the market. For today I decided to cover USD versus Canadian dollar. I'll speak about the gold market, crude oil and Bitcoin versus US dollar. I will start with the USD versus Canadian dollar first. So basically to do the update, and we spoke about this upside even last week, and we had a nice upside swing on the USD Canadian dollar, and now we're basically in some kind of consolidation in a rising short-term upside cycle and upside trend. So I still expect the price to revisit the beginning of this slope pattern, and basically for the price to retest 1.2640. That's the minimum that I expect this week. And if there is even more power, since we have a nice reversal last week, if we even have more power this week, then we can see the mean of this whole consolidation on the left side, which is around 1.2735. And of course, there is some very, very big upside pressure. The next levels even can be around 1.2865 area. So definitely my advice is still to watch for upside bullish opportunities on the pullbacks, intraday pullbacks and short-term pullbacks on this currency pair. Speaking of the gold market, so we got basically gold is trying to exit this consolidation. It's sitting in 1957. We can see that gold is finally moving and start to move some more with some aggression, right? We have a nice rally this morning. We broke previously high, but it's still not that clear because we have a pivot at 1966. We'll need to see how the price will react around this 1966. Daily time frame basically looks like we are exiting this mini consolidation, but still we're locked between this previous high at 1965 and the low at 1887. So I will still like to see even some more clues, right? But we're much closer now to the upside breakout and test of the resistance compared to last week when the gold was just sitting flat and inside of the mean around 1929. So still watch for the breakout and some follow through after the breakout. So I would like to see if the upside breakout will happen, to see the breakout and then some pullback and then not so big volume and no reversals and stuff like that. So, and then that can open the door for 2007 and 2006 on the test. From other side, if there is basically some breakout and strong rejection opposite, we can back to this consolidation again. So watch carefully this pivot around 1966. Crude oil basically seems like we're doing a consolidation last 2 days, but we are in the down cycle, and we basically tested or almost tested this pivot low. There is still a chance we can revisit that 93.65. We've got this consolidation. Now price is trading around the Friday's low, 95.32. So there is nothing bullish here that I can see. 2 hour, 4 hour looks like we're building some kind of ABCs, and so might be the option for this to revisit this low at 93.63 and eventually to attack the cluster the lows around 1970 or 89.40. So again, consolidation to the downside on the crude oil. We'll see the previous day low. If the price will break the previous day low, we might open the door for some retest of this 93.63. Bitcoin basically, I alerted you last Friday basically about this nice bear flag on a 2 hour, 4 hour time frame, and basically market sold off and reached our expectation. The minimum expectation was around 41,800. Now, if we check today, basically we're already trading. We're spending time below the previous day low. I don't see any big divergence or something on a high degrees. Seems like there is a still chance for lower prices, maybe a retest of the 41,800, and then this can open the door for some cluster lows here. We can see at 40,600. So 40,600 will be the next reference point in case we can clear the low here and then eventually to continue it with more downside. So I see nothing bullish here, no reversals, and downside in control. So still watch for selling opportunities on the rallies, intraday short-term rallies, and lower prices. That will be all for today's update. I hope that you did enjoy. Have a great day, trade safe, and see you tomorrow morning.